Lecture 9 Reversal Signals to Bar Reversal Setup. In this lecture, you will learn very important signal, which is the 2-bar reversal signal. Its importance comes from that it is very common in most reversal setups and in every time frame. You will learn to identify the most common variations of this signal as well as the best way to trade them. The most common version of this setup is a pair of trend bars of almost the same size but opposite direction. It's a reliable setup when it comes near the end of a trend, when the trend is showing an exhaustion symptoms, especially when the price is expected to reach a strong resistance or support level. The first bar usually makes a new high or a new low. Then the market immediately shows a rejection to this new level expressed by the second opposite bar. The signal comes either as bullish 2-bar reversal at the bottom of an exhausted downtrend similar to this one, or a bearish 2-bar reversal at the top of an exhausted uptrend. For this setup to be reliable, it is best to analyze the context in which the setup is formed. Not all two opposite bars are setups for reversal. The conditions that were mentioned earlier must apply, particularly the presence of this setup near the end of an exhausted trend near a level that is expected to be rejected by the market. This setup is a confirmation of this rejection. For this setup to be successful, the trader must be already waiting for a reversal confirmation, and once he sees the confirmation by this setup, he must act quickly and enter the market only when the price breaks the second bar. But you should be also alert of any fake reversal by placing a tight stop loss below or above the second bar, depending on whether it is a bearish or a bullish setup. The setup, as I have said, is a confirmation of a trend reversal, and because it comes at the very beginning of the reversal, you must be cautious about fake reversals on the one hand. On the other hand, you must let the trade go to a measured take-profit level and never close the trade early. Because, as I have said, this setup catches a trend in its very early stage. However, you must be aware that when I say reversal, I do not only mean big trend reversals. Sometimes it's a small reversal from a main trend to a pullback, or a reversal from a pullback to resume the main trend. Once you get familiar with this useful setup, you will be able to take advantage of it in many situations. This 5-minute chart shows an example of 2-bar reversal setup. As you can see in this setup, the first bar is a strong bear bar that was reversed immediately by the market in the second bull bar, indicated that buyers were waiting for this level to initiate their counter trend trades. But how to safely trade such setup and avoiding being trapped in fake reversals? The first rule here is that the trader must wait until the second bar of this setup is closed before taking any actions. Bars can change their shapes in any moments, trapping overly eager traders. Once the second bar is closed, trader can place a buy stop order when the price goes just above the second bar here. I mean, when the market breaks above the second bar. This will make you more confident that there will be a follow-through for the new uptrend. Take profit must be calculated depending on a measured move. As a rule, put your first take profit just below the previous support that will turn resistance. As you can see here, take profit can be projected near the previous support, which is expected to become resistance. In this chart, you can see that the price was in a downtrend that made 3 legs down and faced some sort of support just here. After a short pause in the price and a tight range trading, the price broke to the downside in a 2 trend bars that went through the support line, where the price has reached another lower low. The lower price was then rejected by the market by this strong bull trend bar that formed with the previous bar a perfect 2-bar reversal pattern. Bulls stepped in at this price because they thought it is a good level to buy, whereas smart bears took profit just below the support level and closed their shorts. The sell climax below the support level acts usually as a trap at the end of trends, trapping traders in the wrong direction. Once you recognize the 2-bar reversal pattern, a trade can be placed only when the price goes above the second bull trend bar of this setup. So the entry for this setup can be just here, while your stop loss will be here, just below the 2-bar setup. Your first take profit target would be at least the previous swing high and can be projected just here. As I have said before, when you become familiar with this setup, you will be able to spot it easily many times during the day and across different time frames. Here on the same chart, you can notice that this setup is repeated twice. The one that we have analyzed and can be spotted again here. Notice that the second 2-bar reversal setup is a reversal from a pullback to resume the main trend up. Remember that reversal is any change in price direction, and it could be a reversal to new trend or a reversal from a pullback to trend continuation. This is the end of this lecture, and in the next lecture, I will discuss other important reversal signals, which are exhaustion bars and climax.